Hello and welcome to Connect, the weekly podcast for the California MBA, featuring one-on-one interviews with movers and shakers in the mortgage industry. I'm Susan Milazzo, CEO of the California MBA, and I'm very happy that you could join us today. Before I get to today's guests, I'd like to thank our 2023 President's Council sponsors. These are companies that provide a tremendous amount of financial support to the California MBA so that we can remain a strong force for the real estate finance industry before the California State Legislature and our regulators. Remember, advocacy is the cornerstone of what we do at the California MBA, and so we are very, very grateful for the financial support from this year's President's Council sponsors. And this year, those companies include AmeriHome, ArchMI, Consolidated Analytics, Funding Shield, Guild Mortgage, Accelerate, Rocket Mortgage, and Western Alliance Bank. Thank you all so much for your support this year. We greatly appreciate it. And with that, I turn to today's guests. I'd like to welcome back to Connect Dawar Alimi, CEO of LenderPrice. Dawar, welcome.
Thank you, Susan, for having me.
So we've been fortunate enough to have you as a guest on Connect in the past, where we kind of got into a little bit of your background, how you got in the mortgage industry. But I wanted to have you on to really talk about artificial intelligence in the mortgage space. This is something we're hearing lots and lots of, and I think it's being used in new ways every day. And so I would be very grateful to kind of hear your insights on some of the, where we're going, where you see some of the, artificial intelligence going in the mortgage space. So I want to start out and ask you, how has PPE influenced the way mortgage lenders approach pricing and product eligibility in today's market?
Great question, Sam. Well, I promise I won't get too technical. I've got a graduate degree in this, and I can get really too technical, and that'll probably bore everybody. But I think PPEs play a crucial role in current mortgage markets today by assisting lenders in pricing and product eligibility decisions. I think in today's mortgage market, with higher interest rates and real estate, and then limited real estate options with inventories being so low, I think a tool like a PPE is a game changer for mortgage lenders. Product pricing and eligibility engines, PPEs. We use data and algorithms to help lenders make smart decisions about pricing and product eligibility. In this tough market, lenders need to adapt, and their pricing engines help them do that. You're seeing non-QM and a lot of these non-traditional products being introduced, and to be able to have a flexible pricing engine like ours allows them to adapt and provide these various products. So that flexibility is really important. And the other thing is really just optimizing pricing and product offerings based on real-time market conditions and borrower profiles. You're seeing that a lot of the conforming products that were traditionally offered during the, I call sugar rush, you're not seeing a lot of those refinances going on today. So it's being able to offer these new products. We're seeing products like home equity offered by lenders. So I think that pricing engines in today's environment is super important. And you're also seeing why that's important because of what's happening with the whole Black Knight and ICE acquisition. It was a central pivotal importance that the FTC took on, aside from the LOS.
I loved Sugar Rush. I hadn't heard that term, but I think that's really good. Let's think that is what it was.
We want another Sugar Rush.
Right, yeah, for sure. Dawar, could you share your insights on how you perceive the influence of AI in the mortgage industry?
Yeah, so AI has had an impact in the mortgage industry, but transforming like various aspects of lending processes. First of all, let's take a step back. I mean, like we've heard of things like ChatGPT, which is generative AI, right? So you see a lot of that being talked about. You had a podcast recently with Accelerate, my good friend Josh Friend, and how they're actually incorporating ChatGPT into their CRM. Really what you're seeing is you're looking at AI being used for document classifications. So you're seeing like, documents being uploaded, and it's seeing that, hey, this is a tax return, so it's classifying the document. So you're seeing AI being used in very limited terms, but I do see AI algorithms specializing in data patterns and correlation and clustering. So like you're seeing data used in these various 3 types of segments. It's either patterns, correlations, or clustering. But what we want to see is a lot more predictive results from these algorithms. Really trying to look at using AI for improved decision-making processes. I see that a lot, maybe like in underwriting. So like we've got some lenders that use 100 different investors. So how is an underwriter going to search various underwriting guidelines? I think even the GSEs are even incorporating AIs to make it so that you can provide a tool where you can actually look up other underwriting guidelines by a Q&A type format versus, hey, let me just look at the GSE's underwriting guidelines and figure out whether the income that this borrower has suits the guideline for a Fannie product, as an example.
So you bring up kind of where the next question I wanted to go with this, because of course, what I'm steeped in all the time is, legislative issues, regulatory compliance issues. So what are your insights on, like, how do you view the interplay between AI advancements, regulatory framework, compliance requirements, and that effect on the mortgage industry?
Yeah, so I think the interactions between AI advancements, regulations, and compliance is complex within the mortgage industry. I think Bill Dallas said it a couple times that we're in an industry where we make things very complex, but we're also very highly regulated. So I think the interaction of progress, regulations, compliance in the mortgage industry is pretty complex, and AI improves efficiency and accuracy, but it has to follow strict rules to be fair, transparent, and protect consumers. When the mortgage industry adopts AI, it needs to work with existing regulations like Fair Lending, Truth in Lending Act, ECOA, Equal Credit Opportunity Act. But AI can help streamline compliance tasks by requiring careful considerations to maintain fairness and transparency.
So how is Lender Price utilizing AI in the mortgage industry, and to what extent do you think other companies will be using similar AI implementations?
So we use AI algorithms in various ways in our pricing engines to provide lenders with valuable insights and recommendations. We have algorithms that analyze vast data sets, market trends, borrower information, risk factors, to generate real-time pricing and product recommendations. This allows lenders to make smart decisions quickly, but we also use a thing called NLP, natural language processing, for rules generation. So, traditional pricing engines and actually the other pricing engines out there, they use these, if-then logics, right? If then this, then this. That's called control flow logic. You can get in trouble if your if-then logic is not formatted correctly. But by using natural language processing, where you can actually write out, like, the loan amount is between 100,000 and 200,000, 25 basis point hit. It'll take those key words, because AI uses patterns, and it'll create the rules for you. So that's a very creative way that we've used it. We're also using it in a way that after we're extracting data from rate sheets, create rules, automatically without having human intervention. That also helps out in terms of rolling out products faster.
So speaking of human intervention, that kind of gets me to my next question. Do you believe AI has the potential to replace human roles in the mortgage industry?
I think AI will transform job roles in the mortgage industry rather than replacing human roles entirely. AI has the potential to automate routine tasks, data-intensive tasks, but it's unlikely to fully replace human roles. I could see underwriters using AI to underwrite loans faster. AI can handle data analysis, risk assessment, basic customer inquiries, like you're seeing, maybe you could use, various, chat bots to be able to handle human inquiries. And I think that'll free up folks to focus on complex decision making, like really like have underwriters focus on complex decision making, and also help lenders focus on building relationships and strategic planning, because our industry is really based off of building relationships, whether it's internally with vendors and lenders, but more importantly with our borrowers. I think if you're looking at Gen Z and all the various new homeowners out there, or potential home buyers, they're looking at various AI tools to give them information, but ultimately they want to speak to an individual.
Right. You have to, still understand, like you say, the next generation of home buyers are so used to using these tools, and artificial intelligence is part of it. But I think you're right. They'll use that to get some research, but then they still want, this is most people's largest purchase of their life is their home, and they're going to want to speak to a real person and ask some questions at some point.
Right.
It is a relationship business. Hopefully AI will help us be more efficient and help drive down some of those costs to originate a loan. I know lenders would be very appreciative of that.
Absolutely. That's another area. What is the cost of loans today? It just keeps going up and up and up. As long as these vendors keep the cost low, as long as we have continued competition, I'm really happy that we've got some new players in the pricing engine space that we get to compete against. I'm happy that we've got some other legacy PPE vendors out there that are really upping the game. We all need to work together to compete, provide better products, and then to offer efficiencies, but lower the cost of loans, not increase it.
Right. Yeah, definitely the name of the game in this market, any market really, even when times are good, you want to be able to do it more efficiently and for a lower cost. But Dawar, thank you so much for being on Connect. I really appreciate it, and certainly appreciate the membership support from Lender Price.
Yep, and we're looking at being part of that list that you noted earlier with Accelerate and some of the others. So expect to see Lender Price as part of that list in the future.
That's wonderful. We'd appreciate that support. Thank you again for being here. And thanks to all of you for joining us on this episode of Connect. To access any of our past episodes, you can follow us on our YouTube channel. We're also available on SoundCloud, Apple Podcast, and Spotify. That's it for this week, and we'll see you next time on Connect.